How's it going? Welcome back. It's Jonathan. Okay, so it's been a little while. The last video we put out was basically a video on Bitcoin saying don't buy the top. Gave some reasons why. Seems to be a good video, timeless video now that we look back on it. Everyone's telling you to buy, and this is kind of annoying because we're now in the winner's curse phase of this market. Let me just move this out of the way. If you don't know what the winner's curse phase is, it is a subsection of our 18.6-year cycle. And the 18.6-year cycle, let me just squeeze up a newer chart, is based on the lunar cycle, which is the north node. I'm just going to move around, all this, grab our lunar cycle. And I've already done a video on this, so if you want to go back and understand the 18.6-year cycle, which is a theory that McWhirter had written about in her McWhirter forecasting book. And I've got a full-blown course on it, probably over 10-15 hours of content with more to be added soon. We basically go through, take a look at her study, see if we can apply it to the markets today. And then once we've found a working model, I then show you how to actually apply that working model. So it's a pretty in-depth, sometimes a little bit boring, but pretty in-depth program on how to actually get her model to work today. But all in all, it's based on the rotation of the node, and it goes backwards through the zodiac. So if I go forward in time, it actually rolls backwards through the zodiac. You see 0 degrees, 330 degrees, 300 degrees. The node, which is this one up here right now, moves backwards through the zodiac, okay? Now, different points in time when this node rolls through different periods of the zodiac, it signals basically what we're looking for in the markets, whether we're likely to be bullish or bearish and why. This is some research that McWhirter had done. She also studied it off someone else back in the 1800s. However, it is true today, and it'll be true into the future. If you understand this cycle, you understand when to buy, when not to buy. And that's the main reason why property was a good investment in 2020, but it is not a good investment in 2024. Now we're in the winner's curse phase here, which is the last 2-year period of this cycle. The winner's curse, which is a very beautiful summation here of this from this website, it's a curse that appears that what appears to be a win, a statistically significant result, is actually a loss, as a result is inflated or even in the wrong direction and therefore highly misleading. Basically meaning that while you believe that you're going to make a huge gain, buying property, everyone's buying property now, property keeps rising. First home buyers getting in, they're finally getting into the property market. Well, what happens in basically 2.5, 3 years time when this market has topped out and it's on its way down? It's not the fact that property in the long run is going to go higher, because yes, property in the long run will go high, especially in Australia, because we have a property crisis where we don't have enough property. We've got a booming source of people coming in, etc. So there's that disconnect there. But what we have is the potential for a great economic collapse. Yes, something like 2008. Okay, so don't misunderstand what I'm saying. There is going to be another one. It is going to be great, no matter who's in power, no matter if it's Trump or not Trump, or Biden or not Biden, or anyone else in politics, Xi Jinping. Doesn't matter who's in power. Nothing, no government can stop this. And Louise McWhirter gives a very good example of this. Governments are not the cause of crashes, and governments are not the cause of the booming economy. It's all based on the lunar cycle, okay? The north node. Once you understand that concept, you can remove yourself from the politics of things and just use the time aspect, okay? And that's what I have been studying for a very long time. So, again, just to reiterate, the point is not that property is going to go down and it will never recover. No, that's not the point. Property will recover. The reason why it's a winner's curse phase is because other things happen in the economy which can cause this to be a bad investment, or buying into something at the wrong time, whether it's a business, whether it's over-leveraging or buying the stock market top, whether it's going all in on crypto and expecting for it to be worth $10 million in 5 years. Okay, there is no other power except for these cycles which govern the economy. The point is not that these markets are going to go down or up. The point is what happens to you, the purchaser of these assets, okay? Let's say, for example, you've bought a family home. I'm just going to give example numbers here. You've got a $500,000 mortgage on a $700,000 property. Okay, so how are you going to feel when that property, just let me waffle because I'm just trying to give you a life example. How are you going to feel when that property is now worth 500,000 and not 700,000. Okay, you might not care so much. You still have a home to live in. You're not renting. I get it. Okay, so what happens now, or what happens next, when during an economic crisis, you lose your job, okay, and you're unemployed 6 months, 12 months, and you're done. Not only is your property worth less than what you bought it for, you now don't have a job to service that property, which means you cannot sell for a profit. If you do decide to sell it, you'll be selling for a loss. If you don't sell it, you don't have a job, you don't have savings, you'll be foreclosing on that home. Okay? Now, I need you to understand that, because it's not the fact that property is going up or down. Okay? Long-term, property is a sound investment. Okay? We've seen it for thousands of years. Okay? Property does increase over time. Land does increase over time. But it's when you buy and the coming impacts that are going to be what determine if you're going to have a successful investment or not. Your location, okay? Are you in an industry for work that can generate money during a recession? These are things that I need you to think about before you go out and make these decisions to invest, okay? Buying cafes, buying retail clothing shops and things like that. A lot of them do not survive, okay, during these kind of turbulent times. People stop spending, people start losing their jobs. This is now not the time to be over leveraging or over investing into anything, okay? This is the winner's curse phase, which is, again, just to reiterate before I get off the screen, a period in time which is generally around 2 years before the end of this 18-year cycle, where things appear to be good, they appear to be rosy, they appear to be rising in price, they appear to be just on a one-way street to making you a millionaire, are actually bought and over-leveraged at the very wrong time, okay? If you have a family or friend that you think needs to hear this message, just send this video to them, because this is going to happen, okay? It's a guaranteed thing that's going to happen. This market is going to crash. Not today. No, I'm not saying that. This market is going to crash in time, roughly around 2 to 2.5 years. And if you have over-leveraged or wrongly bought or in an industry that you cannot guarantee that you're going to have a job in a recession, and I'll tell you what, no job is safe. I had what I thought to be a relatively safe job as a financial publisher with the Agora company. But as soon as COVID hit, what I thought was a safe job, they started to lay off people. They sent out the redundancy letters. Okay, so no job is safe, okay? So do not over leverage at the wrong time. Now, the reason why I brought that up is because it goes back into our forecasting service. If you want to join the McWhirter program, you can. I now need to find where my cycle is. We're going to go over basically the last 3 months, because now it is April. And I felt that I owed you, possibly, actually I'll just close it down and open up, owed you a video update, because the last video we did was a video about not buying the Bitcoin top, and I want to explain just some reasoning behind that, the timing cycle wise. You know, there's people out there that do price analysis, there's people out there that do Elliott wave analysis, there's people out there that do basically everything under the sun, including pattern analysis, all this other stuff. I just focus on the time cycles, okay? So the timing element and the cycle element. And I wanted to show you basically some of our research and what we put out on our monthly service, okay? Now, if you get the Gann Mastery program, you will eventually, if I haven't done a program on it yet, you will eventually learn how to build these yourself, okay? But basically every month I give you the suggested curve for the month, and also I give you the dates that we're watching for the month. And we do this for a range of markets, whether it's the Aussie market, the gold market, etc. I give you this information. If you want to learn how to do it, then you just join the Gann Mastery program to start to go through basically the long side of this, okay? I'm basically taking 10 years worth of study and giving you that 10 years worth of thought process and study in about 10 hours. So yes, it's long and it's sometimes boring, but if you can't put up with 10 hours of content, then you're not going to be able to put up with 10 years of trying to learn how to do this, okay? It's a very, very long process to find a working model. So it is now April 13th. We're almost halfway through the month. We're just going to go through the last 3 months of data and take a look at what has occurred and if we can, I guess, validate a working model. So let's just take a look at, we'll get up to March and we'll do the turn dates for March as March comes around. I won't go back in time. That'll be too long and boring. So the forecast for January 2024 was basically a bullish bias to begin with, and then a bearish bias to end the month. Basically bearish until possibly the 17th and then sideways. We can see that the market did fall into a low on the 23rd before rising, which basically, so if we take a look, if I just draw a rectangle, this period here is basically a sideways momentum. It pushed lower before rising back into that sideways momentum, which kind of validates this sort of sideways behavior here. What is a sideways market? Let's just confirm that, okay, because there might be some confusion. Let's just do technical analysis here, okay? Let's take a look at a rising market. Oh, golly gosh, it's not going to let me do that. Let me get a pencil instead if I can draw. A rising market is obviously it's higher highs, higher lows, okay? That's simple, all right? Let's take a look at a falling market, lower highs, lower lows, okay? That's a falling market. Now, just so that everyone's on the same page, a sideways market is not this, okay? That's not a sideways market. A sideways market is higher highs and lower lows, okay? That is basically the definition of a sideways market, okay? There is no clear trend, and overall it runs sideways. So depending how the market decides to play out that exact trend, we were looking for rising prices, a top, and then decline, and then sideways prices. That was the theorem, okay? Got it. Happy? Let's move on. For February, we had a basically split cycle play out. We weren't too sure which one was going to actually activate in the market, but there were some clues at which we were watching, and I highlighted them in these boxes at the time. It was basically both cycles were indicating a rising momentum, so prices were moving higher. Then we had a disconnect when one cycle was pointing down, the other was pointing up. So this would have been basically a no-go zone or a gray zone where we were unsure. And then both cycles here, if we just, I wish I could zoom in a little bit. Both cycles here were now pointing from a directional bias higher. Okay, it is flat here. There is a break of the high here. It is flat, just the way the chart is done, unfortunately. And then we had another disconnect in this final period where we were unsure on the actual outcome or the curve. So you would have had two periods of buying, which would be in the first part, and then the second part. And then this part you would have been deciding whether to sell or buy. In this case, the black line was the determinator, and it was the one that was successfully running this market. Okay, let's move on to March now. Now, in March, this is when we were putting out our possible bearish calls for the market. We were looking for a potential top. The initial call, which I had put out, was for a high on the 5th. Sorry, not a high on the 5th. Let's go back. Market's moving up. I believe it was the 5th, a low on the 8th, and then, yeah, it was a high on the 5th, and then it was a lower high on the 11th before the markets moved down. That was kind of the framework I had decided upon. It was wrong, yes, okay. So we actually had the market make a low on the 5th, and then it pushed up into the 11th. The 8th was also a top, and it was at this point here that we started to get this turn here, but then we had the 8th, and then we had the 11th, all making tops, so there was no clear high-low swing, all making tops and pushing lower, pushing up into another top, pushing lower, breaking higher, that I came out and said that there's a very high chance that this market is now going to be pointing down, because this is one of the frameworks that I built and put together for our time by solar degrees method, which is proprietary to me because I think I'm the only one that sort of figured that method out. But when this happens, and I show you more examples and how to apply it in the markets, when that happens, it generally signals that this market's about to top over, okay? It keeps hitting tops on our turn dates, and that is a bearish bias, okay? So you should be looking for the bearish market to eventuate. Anyway, the forecast was black line was calling for a decline into price to begin the month. As we can see, the market moved up before getting this, so that was valid or invalid. It's up to you how you want to look at it. Markets to then rise up into the 11th, and then decline, rise up into the 17th, roughly. Always give it like a couple of days. You don't need to be so static in your analysis. And then a decline, and then basically sideways from there on out. So not perfect, but here we are. The green one, the green cycle, was suggesting prices to rise up until around the 7th, to then slowly fall off to hit another lower high on the 11th, and before selling off, and then trading sideways basically for the remainder of the month. Again, let's just compare that to what happened. Let's not focus too much on matching expectations with the curve. Let's take a look at what happened. Prices rose. They made a top or a bottom on the 5th, depending on how you look at it. Then they made another top on the 11th. Then we had our first sell-off, which wasn't as sharp as the forecasted sell-off, still on point. Then we had our next top, which is this one right here, okay? So if we go up, we have our next top. And then markets finally sold off. So this, if I can clean up the chart now, golly gosh. This sell-off here, which was suggested basically for the 5th before the sell-off, didn't actually occur until the 30th to the 14th, before it was actually activated. And then the markets were to trade sideways. Forecasts are that. They're just a forecast. They give us an equity curve. They give us a bias for the month. They shouldn't be traded to the exact day. You need to overlay other theories, which is our time by solar degrees method, which is our technical analysis, which is our price analysis. We'll use all these in combinations. But this is a reason why one month I'll come out and say that I'm looking for a bearish bias to occur. And I'm looking for certain dates to play out, because we're overlaying everything. Let's take a look at some of our dates that we're looking at. We're looking at the 4th, which is a Monday, the 8th, which was a Friday. If we take a look here, we can see that the low matched the cycle low, which was the 5th, so it was 1 day off. Market was moving up into the 4th, reversed on the 5th, hit a high and a low on the 5th. I would probably classify, once this market broke here, that the 5th was the low, okay? So that would be in a swing low. Let's go back and just double check this. The 8th was the next one. We can see that the market topped out on the 8th, fell lower, didn't break it until the 11th. The 11th was a date that I highlighted, and I think I made a video for it in the back end on that reasoning. The 15th was the next date that we were watching. The market then moved higher into the 14th. On the 15th, the market had already began to move lower, so the 14th closed a little lower, and the 15th began the sell-off. Then we were looking at the 22nd, so we moved down, we got the 20th, the 22nd was the low. So fortunately, the market made its final low on the 20th, not the 22nd. Nonetheless, the 22nd was a low. Markets broke above that, moving forward, and then we were looking at the 30th. So 27, 29, 30th, move forward. I think we can see that 31st was the eventual top before the market sold off again. These turn dates are very powerful. They might be off by a couple of hours depending on the time zone that you're utilizing. I believe this one was possibly Aussie or American time zone. I couldn't quite tell you. I didn't write it down on the chart. But when you associate it to your time zone and you overlay our time by solar degrees weather projection methods, where we use the actual temperatures of the weather to get a more accurate reading of when our turn dates are going to occur, because yes, despite what everyone tells you, everything is astro-based, okay? Everything. Whether you know how to use it or not, everything's astro-based. You got people out there that make millions of dollars using astrology and gambling. You know what they say? Well, if it really worked, wouldn't everyone be rich? Well, actually, there is some people that know how to use it, and there are other people that don't know how to use it, okay? Same with financial astrology in the markets. There are some people that know how to use it, and there are other people that don't know how to use it. You have to develop a working model, and I give you that working model in our Gann Mastery Program or our time by solar degrees method. If you just watch the videos and actually start to apply the application of it, you'll see that it does work. It might not click straight away, but if you just watch the markets play out, it'll begin to work. I was introduced to this method because I wanted to basically understand what Gann was doing properly. I was introduced onto a working model by Phil Anderson. He gave a working model without the explanation of the working model. So he basically told you the answers, but didn't give you the reasoning behind the answers. It then became a personal discovery onto the why, and it wasn't until I figured out the why I was able to apply it myself. What I do for you in the time by solar degrees and the Gann Mastery is I give you that why. The why can be long and boring, but once you understand the why, you're then able to go out and do it yourself. if I was to tell you how to achieve something without telling you how to actually achieve it, you wouldn't actually understand the reasoning behind that, okay? So just keep that in mind. There is, just like anything, just like price analysis, if the market moves out of an eventual low from a price cluster, or if the market breaks above a certain price cluster, you're looking for the next one, right? And you're looking for the next one, why? Well, you have a reasoning why, okay? If you're an Elliott wave theorist, you're building different Elliott waves for different reasons, you understand the why behind that, okay? But if someone who's just looking at all these lines on the chart and they don't actually understand the why, it's hard for them to apply. I'm just trying to give you several examples, okay? So yes, the turn dates work. They are spot on most of the time. I like to say they have a 90% accuracy on hitting the actual dates to the exact. However, we give it 1 or 2 days leeway just to make sure. So when you apply the cycles, when you apply the time theory analysis, and then when you overlay your technical analysis, you're able to get some stellar results. I tell you that the results are just beautiful. So should you be buying or selling right now? The cycle that everyone is following right now is bullish for Bitcoin. That's what everyone's following, so the masses, okay? And I highlight that in our April theory for the Bitcoin market. I highlight that everyone is now bullish on crypto. However, I also showed them an alternative cycle which is pointing down. So I'm not going to go into that cycle until the next quarter, which will be around June, July, because people are still utilizing it, etc. But there are, right now, I'm not bullish on crypto market. If we want to talk gold for a second, just because we're on that topic, gold is in a 5-year bull market right now. It is activated astrologically. David L. Linsky is probably one of the foremost authors on the gold cycle. He's got a perfect working model. And it activated in March of 24. It activated bullish. So now gold is in a bullish market for the next 5 years. However, on a yearly cycle, I am leaning more towards bearishness right now, that we were looking for an April top on the yearly cycle before the bearishness started to activate. So we'll see how that plays out, whether the market continues to push higher on the longer term 5-year cycle. However, for a 1-year period, I am sort of looking down now. I think a lot of the bullishness has been absorbed and price should now start to decline. The dates I was looking for a potential top were the 12th of April for a potential top, maybe the 15th as well. So that's all I have for this week. I don't know, this video, whether it's this week or this month. Just wanted to give an update. If you want to learn any of this, you know where to go. If you want to just hit me out with a message, I'm more than happy to answer any questions you have. I'll talk to you soon.